Hello, everyone. This is Dr. Duru with Alhan Analytics and the market breadth. Well, today was an oversold bounce day. You're looking here at Swing Trade Bots market recap. All the trends are essentially still down. The Russell has flattened out, but as I'll show later, it's still in a very bearish mode. Now, I'm going to go through this really quickly. I've done a lot of videos this week because there's been a lot of action. I've shown a lot of individual charts. I'm just going to really focus mostly on the indices this time around. Okay, so that's the trend look. What does market breadth look like? Well, market breadth had a very strong day, up 5 percentage points to 27%. This is the kind of bounce I like to see. So I believe that this signals the beginning of a sustainable low. Notice I didn't say bottom because if this bear market continues over an extended set of weeks or months, we could come right back to these oversold levels multiple times. In the last video, I showed what that looks like from the last bear market in 2022. But anyway, I don't want to undersell this. This is a very good day in terms of market breadth. It shows that we had some good buying power. That's the percentage of stocks over their trading over their 50-day moving averages. So let's take a look at the 200-day version of this. And this is even better because it cleared basically all the highs of the last 3 days. And so the percentage of stocks trading above their 200-day moving averages jumped almost 5 percentage points to 37.4%. And again, you can see the other videos. There's still a lot of potential downside here, but again, I love this action in terms of clearing out a lot of the bad trading action that was happening earlier this week. Now I'm going to switch to logarithmic so we could take a look at the indices. Let's start with the S&P 500. It had a strong day today, up 2.1%. That's a pretty big day. Now, one thing I'm noticing, and I don't know why I didn't notice this earlier, that we have gone straight down. The trend has been straight down, but we have still alternated between down and up days. I took advantage of this earlier in the sell-off, but I somehow lost track of this pattern. So take a look. Big down big one day, up big the next, down big the next day. Then we had a down day again, so that would of course throw off the pattern. But then up again, down, up, down, down, up, down, up. So most of the time, I think short-term traders are starting to learn this. Most of the time, buy towards the close on a very bad selling day, and you're likely to be able to flip your position the next day. So anyway, we'll see if this continues. If indeed, as I think is happening, that we're getting some bottoming action, then of course that pattern is totally out the window. Don't forget, we have a meeting from the Federal Reserve on Wednesday. I'll put a link in the caption on a blog post I wrote on my Inflation Watch blog about what to expect in terms of the general context of setting monetary policy going forward. Okay, let's take a look at the NASDAQ. The NASDAQ also had a very strong day, 2.6%. Not quite as impressed with this as I am with the S&P 500. Notice it's still in bearish territory, deep in bearish territory, well below the 200-day moving average, which is this blue line. Let me just point out also the pattern that is in place, down, up, down, up, down, down, up. This was a big up day, and it fooled a lot of people, including me, that the 200-day moving average breakout had happened. Then down, up, down, up, down, up. So there you have it. Let's see if that pattern continues. I'm pretty sure over the weekend, most traders who are studying the action will pick up on this, and then the pattern will go away. But who knows? Now, IWM, which is the iShares Russell 2000 ETF. It also had a very good day, 2.4%. This is not too impressive. I know the trend is now flat because there's an extended set of days where it's basically gone nowhere. But, I still think this bear market line is beckoning IWM. I did buy a call option just for a quick swing trade because if this continues, IWM could quickly rally back to the 20-day moving average as resistance, which is this dotted line. Let's take a look at the VIX. The VIX, it's coming down as I would like in terms of it is confirming that some type of low is underway, but it didn't quite implode the way that I wanted to see it. But taken together, it looks like an implosion over the last 3 of 4 days. So we have to take what we can get. Again, these are no guarantees or predictions. This is just um, patterns that have been in place in the past. All right, so that's the VIX, the volatility index, sometimes known as the fear gauge. It's starting to come down as we would expect after such fear and heavy selling in these last few weeks. Okay, now, like I said, I looked at a lot of individual stocks this past week, so I'm not going to go over a bunch of them, but there's two that I just wanted to call your attention to. Micron Technology has earnings coming up. It looks relatively resilient given what's been going on in the market. You see this long trading range. I'm on watch for a potential breakout. So the 200-day moving average has pretty much capped the trading action. If earnings takes Micron above this, I probably will be a buyer, even though there have been some fake outs earlier on in this trading range. And of course, the bad, if the bearish thing happens, which I don't quite expect, just because this consolidation phase looks pretty constructive, then of course Micron goes to very bearish territory if it breaks below this trading range. Sorry, I should have drawn in the lines so the trading range is clearer, but hopefully you could see that. And then the other individual stock that caught my attention is Hershey's. Hershey's, I am already a holder in this. And it was great holding Hershey's during this massive sell-off since late January, early February, because it rebounded nicely. But again, the confirmation that there's some kind of low in the general market going on is at Hershey's, which looked like people were running to for some sort of defense, some sort of defensive play, which I frankly don't understand, but I guess it's non-tech, so it's non-tech and non-transportation and all and non-industrial, so I guess that's why people flock to it. But you could see heavy selling starting on what is this? This is Tuesday, and this 200-day breakout turned into a fake out. So I'm hoping at least Hershey's will just stabilize here, but I just wanted to point that out because it's another sign that we're probably getting a sustainable low in the general market. Again, not a bottom, but a sustainable low. And Hershey's also broke this nice steep uptrend, which, it was so steep it couldn't be sustained anyway. Okay, that's it for individual stocks. Let me go to some indexes and ETFs because there's some interesting things unfolding here. First of all, this is the iShares for Mexico ETF. Notice how, despite all this tariff trouble that we've been hearing about, it actually had a pretty good week this week. It bottomed on Tuesday and was up every day from there. Now, it hasn't broken out above the 200-day moving average, but I'm watching this very closely. In fact, I tried to buy some today because I think it actually could break out. It's at least going to test that and maybe consolidate again for a while. But this is very constructive trading action here. EWW is going from bearish, is making a bearish to bullish reversal slowly but surely. So keep your eye on that. And if you need any further confirmation, the Mexican peso has been strengthening in the last, actually all this month. And I am long the peso. So I am enjoying this, particularly because the peso also pays a high interest rate. And so if I were to draw a curve here, you could see that there's sort of this topping out of the US dollar over the Mexican peso. And as I wrote in another blog post in Inflation Watch, I predicted, or I shouldn't say predicted because I don't predict. I was describing how I thought I had a sense that economic relations with Mexico couldn't get much worse. And that was kind of the fundamental thesis for why I thought the US dollar had peaked out against the peso. And for those of you who really want to extend the meaning of this, it could suggest that the whole tariff tantrum that's going on may see a quick reversal as relations suddenly and magically normalize. Now, again, not making a prediction, but if that happens, you can imagine the peso will be one of the best currencies to own during that normalization time. Okay, and then the last ETF I wanted to take a look at is Europe. Now, after all this trouble, that we've been having in the US, Europe has actually been having a great time. This is FEZ, which is the top 50 stocks across Europe. I think it's the EU and the UK and maybe some other non-EU countries, but I think it's dominated by EU companies. And you can see here that if you're in Europe, you've had a good year. I mean, it's been ever since the year opened, this has been in a general uptrend. And I think Fez is catching more and more attention. The reason why I'm bringing it up here as well is that this tells you that what's happening in the US is pretty much self-inflicted. The global economy is okay for now, but even though, of course, the US is doing plenty to undermine it. So anyway, I'm looking to get in. I really should have got in right here because you can see this nice uptrend along the 20-day moving average, which is the dotted line. So I'm looking to get into this soon, sort of to just basically diversify away from my US dominated portfolio and SPY holdings. So anyway, that is it for today. I made it short. I know I've done a lot of long videos. If you have any questions, just put them in the captions. Otherwise, subscribe to this channel for more of this kind of content. And as always, I appreciate you checking in. For further details on my market analyses and observations, check out my blog at drduru.com/122, all one word. See you later. Take care.